Good morning, traders. This is Chris Buss with a morning look at markets for Friday, September 25th. Okay, I'm running a little late today. I'm going to buzz through this real quick so I can get it out to you, kind of set the stage for today. Gold yesterday was up a little bit on a flat US dollar, but this morning both gold and silver are down about 1% with weakness in the euro, strength in the dollar. So that's going to be a continuing theme for us going forward, just to see how far this US dollar bounce will go and what impact that'll have on gold, precious metals, miners, commodity complex, etc. The key level for me is this 171. If we get down there, what happens? Do we bounce or does it fail and come back to the 200? Miners yesterday got a good bounce off of that key level, 37 support. With gold down 1% today, I expect that to be tested again. And again, that's our key level. That has to hold or we come down to the 200. SPY, a lot of volatility yesterday, as I mentioned in the blog post. But as far as the daily chart, no changes. Lower highs and lower lows. Price is set to open down towards the bottom of this range near 320. That's the key level to watch. That'll be a battleground for today and going forward. Below lies the 200 down at 310. And if the bulls can pop this downtrend line, they would have some room to run. So the downtrend line and 320 are your key levels on the daily chart. Dropping down to the 2-hour look, we've got this falling wedge, which is normally a bullish setup if they pop the downtrend line, but thus far they have not been able to do that yet. Yesterday had a big look and had a touch at the top of the downtrend resistance line, and then they sold that off and brought it back to this 322 level, which was the Wednesday close. So this morning, if it breaks below 322, then your next test is at 320, and then I have some support coming in at 318. This gives a real clear look of the price action yesterday. Notice that the first bounce was big. They sold it off. The next bounce was lower, and they sold that off. So this is a bearish structure. If the bulls can pop 325 or thereabouts, which is right here at downtrend resistance, that would be a bullish event. They would have room to run up to this 327. And if they take out 327, then they've got room to 329 and 332, which we visited earlier in the week. Now, on the downside, 322 and 320 remain in focus. If 322 breaks, then you're going to get a fast check down at 320. And then if that were to break, then of course we're going to see further downside. Take note of the bullish divergence here. We were really low on momentum on the first touch. On the second touch at the same level, we were higher. And on the third touch, we were even higher. So the bulls do have some bullish divergence working. And you would expect in a bull market for there to be a breakout in this run higher. That hasn't happened yet. So as it stands, there's the potential with the bull divergence under the surface for there to be a trend reversal. So be aware of that. That said, the bulls have to prove it. I'm in a mindset now, the bulls have to prove it, not the bears. So what the bears would obviously like to see on a Friday is to break these levels and put it on a solid downward course. Now, as we've talked, several times, they like to make it difficult on a Friday so that nobody has a clear shot over the weekend. Last Friday, I said the same thing, and they made a big move. So we'll have to see what happens today. Stay open to bullish scenarios and bearish scenarios. Don't get locked in. Qs on the daily, same kind of look as SPY. Lower highs and lower lows. Down here at 260. We've got the 38% fib at 255. That's your next downside level of support if 260 were to break. 2 hour time frame. What I like about looking at these different time frames is it makes everything really clear. This was the sell-off Thursday. Then they sold it off overnight and opened right near 260. They jammed it higher in the morning up to this 268 well-defined resistance, and then they sold it off. Not a lot, but they did sell it off. It was rejected. So for today, if the bulls can break above 268, then they've got a shot at 273, the prior high, and then 275. Anything above 275, you can almost take 280 to the bank. That's what I would expect there. On the downside, bears got to drive it down to 260 and break it for a chance at 256 and then 251. We've got that familiar triangle look. Unlike SPY, where they tested the lows each time, the Qs have been able to put in higher lows. You can see it here. So, as we discussed, those are your overhead resistance levels, and those are your downside support levels. This may work inside this triangle today until it finally has to decide which way to break. IWM, pretty weak, but still has this falling wedge structure. Price reached up to tag this downtrend line and was rejected. Then they sold it off. Your key levels are 142 and 146.50. Maybe you call it 147 here. I've got that mismarked. 147, if they were to break that, then they got to run at 149. And here it is on the 30-minute chart. Pretty well-defined downtrend channel. They really need to clear this 146 to get a run higher. And of course, if they start losing 143 and 142, then it's down lower towards 140. And then I have key support at 136. Facebook, again, this downtrend line. If Facebook can pop it, you're looking at 255, then 260. But on the downside, if they lose this prior low, actually it's been tagged twice earlier in the week, below 245, then we start moving deeper into this $15 wide gap. Apple didn't do a whole lot yesterday, but it did save that weak opening, bounced it up, but basically got rejected at 109. I think today, if you're actively trading it, anything above 109 is bullish with an open door towards 112, 113. And anything below 109 is bearish, with the potential of 105, 103. Amazon has this triangle forming. For all intents and purposes, a break above 30.50 gives it an open door for another $50 up to 31.51. Excuse me, that's $100. So $100 move up here to 31.51, and a break below this 29.75 here opens up a $100 downside move. So these levels have been working really, really well on Amazon. So I encourage you to lean on them. Prices acted very well with these levels that we've had marked out for weeks and weeks and weeks. Microsoft been putting in a series of higher lows, forming this I didn't have the line drawn in, but forming this triangle. I think above 204, you can get an open door to 208, 210, but below 202 opens the door to 200, then 197. Google, daily chart, firm downtrend line in place, wrestling with the 200 EMA, managing to close just above. Below the 200 EMA, we're going to come down in this 1350 area, and then above downtrend resistance has an open door towards 1475 and 1550. Netflix, 475 has worked well, acted as resistance here 3 times, acted as resistance all day yesterday. If it can break above 475, then you're looking for 485, then 495. On a break of this trend, I think you'll get another test of this 466, 465 area. If you were to lose that level, then I'm of the belief that, it's going to come down towards 430, where the 200 resides. Tesla had some interesting action yesterday. Had a really weak open, and then the bulls stepped in and saved it. But as you can see, they were only able to get it up to the downtrend resistance line. We do have an open gap here between 410 and 420. So if they were to break this uptrend line, those would be your natural upside targets. Maybe it comes up here to 420 and fills that gap. If it were to move above 420, then you're looking at 450, 460 area. If it gets rejected here, coming back down towards this 350 area, 360 area, which was the low of yesterday. I mentioned in the notes this morning to start putting HYG, the high yield bond index, on your radar. You can see here, it doesn't look like a lot, but a move from 85.5 down to 83. And remember, this is a asset class that the Fed is supposed to be managing, with their buying. So it would be a significant event if high yield were to lose its 200 here at 82. And I would set an alarm there, even if you're not planning on trading it, just as a market indicator of stress in the credit market, and that usually bleeds over into the equity market. So that would be a good place to alarm or be aware of. Okay, let's wrap it up. Thoughts for the day: watch the dollar, especially if you're trading the precious metals or commodities. It's showing strength this morning. See if that strength carries through the day and watch its effect on gold, gold miners, silver miners, and the commodity complex as a whole. It's Friday, and the great Peter Brandt says always watch how they close on a Friday. It's very telling. Let's see if they park it in a place to leave everybody guessing, or make a big bull move to put the bears back on their heels, or do the bears step in and kind of finish this week strong with a down move. Don't lock into a narrative. Watch your levels. Keep your head about yourself. Don't get over your skis. Don't lock into a narrative. And I think with this added vol, you'll have some good intraday trading opportunities. For those on swing trades, nothing has changed. Everything still looks bearish with sell signals across the board. This weekend, we will revisit the weekly charts, where you'll remember we have weekly PPO bearish crossovers pending in the Qs and in SPY. We'll see how much progress has been made and if those intermediate to long-term sell signals trigger. So have a good trading day. I hope it goes well for you. If you're new to the channel and like the content, please hit the like button and subscribe to the content. Have a quick look over in the show notes. You'll find links to the blog and how to register for my content to get it delivered to your email box each and every day. So this has been Chris Buss with Traders Profit Compass. Have a good trading day. Talk to you next time.